All right, what's up, everybody? Sorry for the delay here. My computer decided to update at the last second here. All right, let's get going. All right, market already trading outside of DD bands. Nasdaq, as you see. Trading outside of DD bands. Russell pushing higher. VIX is below triple B. That's great. Let's say hello. Welcome back to the possible bull market. Loving what I'm seeing. All right, let's get back to here. Get some music going. All right, guys, how's it going? Smash that like button real quick. All right, let's go. Let's get some liquidity maps going. All right, bull long up out the door. Resilience positive, looking great. All right, so supporting at hedge pressure, supporting at half gap. So this is an upward day, probably hedge pressure to DD bands on the green side. Looks great. Remember, DD bands are no longer available in the Discord. The bot was a temporary thing we did until we got to automate in the platform. Now it's automated in the platform. You can access it fairly easily. By clicking the risk interval area down here, give you all the information you need for that. Pro Plus folks will have access to all the new tools here. All right, let me double check what's going on here. All right. Lost. Trying to connect again. All right, sorry. All right, guys. We have new releases coming out. We're about to start working on this huge optimization project on the platform, which is going to be this really awesome thing. I can't wait to do it because what we're going to do is we're going to clean everything up and make it run smooth. Now we got futures in there. It's a whole new chapter for us. We have VIX. Oh, we have VIX. It's going to roll. Oh, nice. Okay, cool. That's done. Awesome, guys. Smash that like button if you can. Does anybody have any questions about the new Pro Plus package? Y'all know it's a lateral move for everybody that's a member, already a member. Lifetime, I'm gonna say this one time, and I want you guys to go in the chat. Yesterday, some dude wasted like 30 minutes of my life because he doesn't read the announcements. And it irks me because that's why we have to repeat. It's like, why do you repeat yourself? Because you don't fucking listen the first time. I said repeat myself a dozen times because they say it's annoying that you post about it every day. Like, because even posting about it every day, somebody still doesn't get it. That's why. Literally, that's why. Okay. So here's what it is. Release Pro Plus. Pro Plus prices are going up. But if you are lifetime, you already have Pro Plus. Doesn't apply to you. If you are a Pro Plus, if you're yearly, you already have Pro Plus. Doesn't apply to you. If you are a member from any other time, you are Pro Plus. Doesn't apply to you. It only applies to people in the extended trial right now, or people that haven't signed up yet at all. Today going forward, tomorrow going forward. We extended it one more day because of confusion. People were saying, I don't get it. Why are you taking risk interval and raising the price and making us pay more? Nobody's paying more. 0 people are paying more. You're just an idiot. And I love you, but you're a fucking idiot. Read the announcements. Nobody is paying more. Nobody will wake up tomorrow and their charge will be more. 0 people. The handful of people that are in pro, which is people that don't want futures, don't need futures, so they can choose to upgrade or not, but the price is the same for the deal as well. Pro is 89, futures Pro Plus is 89 until tomorrow. You have 1 day to switch or forever hold your peace. I thought we were clear on that. I think we talked about it every day for months and years, but we'll figure it out. Anyways, so some people were writing me like, I don't understand, why would you raise the prices and all, and I'm like, God, what happens when one person is going on a rant because they didn't read the announcements, and then other people come to me and they're like, what's going on with it? Like, nothing. So essentially what we're doing is we had Pro platform, now we have Pro Plus platform. This is new as of a couple weeks ago. You have 2 different options. So right now I'm waiting to just long up a hedge pressure, just showing you guys what I'm doing. 2 options as of right now. Pro and Pro Plus platform. The difference is the Pro Plus platform starts here. Pro ends here at Discord. Pro Plus is going to have all kind of other stuff as we grow. It's going to have more features as we grow in Pro Plus. Now there's 2 platforms. The packages mean something besides different educational content. Now in the meantime, while we're building something, we had a courtesy where we would make bots in the Discord to hold us over until we build something. But those are a temporary courtesy, and they always have been. Me running a manual bot once a day for years was so us can get to this point where I don't have to do it anymore. I love you guys, but I don't love you all that much. Trust me. To wake up every day, I mean, to stop what I'm doing every day at 5 p.m. in the middle of the afternoon means I can't go to the zoo, I can't go to dinner, I can't go to a movie, I can't do anything. Can't work out. I got to be here and run a bot. And now it's automated. Then it's done, right? It's now on the platform. All we do is move that and finally open it up here. It's behind the Pro Plus paywall, but that's what it is. Extended trial. We'll learn about DD bands in the extended trial, but they will not have access to the details of it unless they upgrade during or after their trial. So some of the features will be introduced in the trial, but you won't be able to use them unless you upgrade. And that's the whole point of the trial. As we're growing and building stuff, that's how it's going to be. We're going to make something, then we're going to put it in the right package. We may give it in the trial, we may not give it in the trial. So if those people are in the trial right now, it's $35 a month, right? So at the end of the day, you get to choose at the end of your trial, where do you want to upgrade to? You want to upgrade to Pro or Pro Plus. Pro Plus will have all the feature stuff, additional alerts, other things. Or you can stay Pro, which is the platform as you see it now in the extended trial. The only difference. All right, questions you guys have? Maybe it looks like DD does not print until the market opens. Yeah, that's a good question, Llama. I didn't notice that either. Can you make note of that? That happens tomorrow. He's supposed to print, or the logic's supposed to print it at exactly futures market open, not equities market opens. But one of the things is that we're working on optimizing the speed and the connections and stuff. That's our next real big project. So once we crammed everything in, we obviously know some things are slowing down and some things are being a little wonky. So our next step is to go through and clean it up. We promise you that's what I'm literally talking to him about it right now. The only ones complaining were people already in Pro. Yeah, and the two people that complained were already in Pro Plus to begin with, and it was like, that didn't make any sense. So the handful of people that are in Pro, they chose to be in Pro. Most, I say 98% of you guys are in Pro Plus. That's, let me reboot my stuff. So that's the whole thing, is that it's that people don't like change, and you have to understand it. I get it, but you have to read all the fine print. We made it to where everybody can essentially migrate over at no additional cost. If you were yearly or lifetime, we migrated you behind the scenes without you even knowing. It was so easy to just click a button and it switches you to the new package with no additional changes. Like, we just basically changed your membership to Pro Plus, and that was it. So if you were yearly or lifetime, you woke up one day and you had Pro Plus and you didn't even know it. Now, one of the confusing things is that on the website, it doesn't say Pro Plus. It still says Pro. And that was one of the tasks I had on there, to say cosmetically you were in the right package, but cosmetically it didn't show it. So one of the things he wrote this morning is one of the quick patches we noticed, it kind of led to the confusion, is this right here, and I'll just read you guys this from this morning. It said the dashboard platform button should say Pro Plus, a Pro Plus member, Pro for Pro starting Monday. So like, people still said, well, I'm still in Pro, shit, I gotta go pay, because the website didn't say you were in Pro Plus, or some of the packages, or some of the membership. So it's like cosmetic errors. I get it, it can be confusing. We find these little things as we go, but rest assured, nobody woke up today. The question was, how come we've been using risk interval, and how come it's gone now, and how come I got to pay to get it back? And the answer is that applies to no existing member. If you come to your platform, you'll see it right there. If you're an existing member, there's a handful of people that are in Pro that were like, hey, did you know you need to upgrade to Pro Plus? And to catch them, we made them the same price. We're like, just now. And that's the whole announcement, was for those people in the extended trial folks, to say that just now, as of last night at midnight, we pushed it forward for another day because of confusion, but we said this is it. We're closing that door, and the price is going to the real price. You have one day to convert for free to Pro Plus if you want it. And some people don't want it. Some people don't need the future stuff. They don't want it. They'd rather have a cleaner interface or less stuff or whatever. So anyways, so zero people for the most part, unless a few cases, folks in Ashton's original crew might have to pay $10 extra a month to go to Pro Plus. But they still get a huge discount. That's from the merger. So that's it. Just a handful of people, but they're paying nothing anyways for that experience. Trading NASDAQ, but I don't need edge clear market data. It looks like I can use Roxy for NASDAQ. Yeah, you can, as long as you have the data feeds through here. Now, the point to have futures data is either to trade futures or to use DD bands or other futures alerts to come with it. Okay, so what Pro Plus does is, Pro Plus is a feature. Now, if you have any questions, just go to the website. The website will detail every part of what it is we offer. These are the differences between the two, or the three. Pro Plus is going to be essentially everything additional to Pro, which is going to be like your liquidity maps, resilience, monthly maps, scanner, the alerts widget, all that stuff is Pro. You good. Pro Plus adds futures data sold separately. You can auto chart your DD bands. You're going to get DD band break alerts, working on those today. You can get live trading of futures. You get daily updated risk intervals, daily updated illiquidity pivots, red lines and yellow lines. Now, those aren't made yet. This is a placeholder for those, but just it's there now, so everybody knows that when this comes out, all references to red line and yellow line will be gone from Discord as well. They'll be in the platform. The watch list widget, which you see on my screen, additional alerts will be here. Oh, I put that on there twice. Additional classes, et cetera, et cetera. So right now, Pro Plus has these additional features. Let me walk you through it. Anything related to futures, just think Pro Plus. Risk interval, yellow lines, red lines, this will be there. Any alerts, the 2 irrational rules that are based on future, well, 3. Catalysts will be in here when we get to that. Catalyst DD bands and VIX risk interval will be alerts open for Pro Plus. Essentially, all of our stuff we have will be Pro Plus. Oh man, yeah. And we'll go today over like a class to kind of teach the differences between the packages. Yeah. And how to view DD bands inside the platform is very simple. It just prints them for you. It's part of the liquidity map indicator. If you switch to SPY, it should pop up. If you switch to futures, they should switch between the two. So I have liquidity map in all of my charts. It should be there. Now, right now, I'm having some issues where every time I load up futures and I switch between the two, it's disconnecting me. And so one of the things we're about to do is optimize the platform. There's not gonna be any new features for a while. We clean up the speed of the platform and make it work really well. Cool. All right, so we're about to touch upper DD band. That's actually, I think we have. Let me double check this. Let me make sure the numbers are right. All right, and actually it's on. Oh wait, did the risk interval change for the S&P? No, it's 31. Okay. Let me double check. This number looks a little off. All right. I'll be right back, guys. All right, I'm back. All right, everybody. Okay, market's looking pretty solid here. Little dip to hedge pressure. Like I said, I think that this is pretty good. VIX is below triple B. We're talking about until expiration of VIX monthly options. That is the last, kind of like the last resort for bull market. To see VIX in decay is a good sign for the remainder of the month. All right. So data, and also Pro Plus allows you to have access to futures. Somebody was asking about that. So you can have Edge Clear as one of our brokers we're working with for now. Is that you'll be able to connect your futures data and have your futures data populate the alerts and candles and trading and other things as an optional part of feature. I think oil is a sell here. I don't know. It's hard to say. I honestly think that many physical commodities are probably going to hold the fort in periods of inflation. You know, they tend to be trades that people like plant their money in to weather through a storm. I honestly don't. If equities start to surge, I think that maybe you might start to see some pullback in commodities. But for now, I think oil's probably stable where it's at least for the time being. People are kind of shifting money around very little these days. The risk interval for VIX is not correct. Yeah, it's not correct, Joel. I have to go analyze that really quick. There's some parameters I need to change. It's just in the platform now. So yeah, the number is not correct. It said 0.9, right? I need to go modify something on the back end side. He built it off of my calculation template, which probably used an old value. All right. Market looking stable today. So belong up, hedge pressure support. I like what I see. How are you guys liking today? Again, pressing all the way, like Nasdaq already pushed through its upper band, so it's kind of, you know, spotty from here, I'd say. But I think that the way that VIX is settling out, the volatility being in decay, the market's probably going to slowly start to climb higher. I think it's probably starting today. It's going to probably move. Now, if I get hedge pressure tap, I'll probably take a long off of this. Just a little higher. I don't know why YouTube said private. That's so weird. Thank you for all sending me messages here. I think my default stream settings were private, so I can record videos. But when I reset everything today, I don't know why I went back to private. It's weird. Is PayPal a payment option? It is not. And there's no plans for it to be. I don't like PayPal as an option. I love using PayPal, don't get me wrong. I don't like PayPal as an option from my point of view as a seller of things. It's just not able to use monthly map. Let's double check monthly map today. Monthly map seems to be working well on my end. But I'm noticing platform is starting to act very slow, and so it probably just isn't loading up for you. Even mine's acting a little slow. We've added so many features that it's starting to kind of affect performance, and a lot of what you're experiencing right now might just be that. Give it a couple minutes, but make sure you're still connected by going to the status button to the right, and make sure all your connections are there. So we're going to take about like a 2-month break on features to really, really speed up the platform and optimize it. So I'm excited about that and make it super seamless again. We already did an optimization project like this at the start of the platform when the scanner came out, and then things are super quick. You can switch between tickers very quickly. That was also a big part of the project. So you can just, and then auto scaling as it showed up. Like all of that stuff was part of that. So now it's going to be speed optimization, memory use, connection efficiencies, all kind of good stuff. All right. PayPal. Well, also with PayPal, like you can buy something and just say you never got it and you'll get your money back. And that's it. Even if you got it. So in the educational business, like nobody in education should ever use PayPal because you teach somebody whatever and they can just say they never got it and then you get a full refund. I heard horror stories from friends of mine, their businesses in PayPal, they don't care. They side with you every time. And did it work, Garrett? Okay, cool. It's just it's a speed thing. Okay. Market looking great. I think with VIX and decay, this is one thing everybody needs to note right here. VIX below triple V is a big part of understanding how bull markets set up. Bull markets tend to exist when VIX is in decay. They go hand in hand. Bear markets tend to be supported by extraneous volatility and volatility growth. So VIX going lower lows, which below triple V, is a very good sign for an extended move to the upside. Like this is a temp bottom. We go back to monthly maps today, which I loaded up here. You can see that QQQ's strengthening bull side. That bull market is building back up. The S&P, that bull market's building back up. Do we all see that? These are all great signs that market's going to press again for double top. I like it. All right, cool. So it doesn't look like there are going to be lower lows on the quarter. Monthly maps stabilizing, not necessarily in a bear zone at all, right? We're back to that same decay pattern. The market, remember when the Fitch thing came out, we got slapped pretty hard. Shattered the entire integrity of monthly maps and everything kind of just got wonky for a little bit. As you see right now, though, bull side getting stronger, bear side getting weaker. Indian SPY, bear side getting weaker, bull side getting stronger. So that bullish pressure is back. So we're good there. I love it. Lost 18K from retail store. Thanks to PayPal, details are stolen and they were pro scammers. Oh my god. That sucks, dude. But DD bands and TD platform is okay to use for now? What do you mean? You can use whatever platform that you want. We automate them here, and as the numbers change, the risk intervals, you have to get them from our platform. This is where they're published now. So to do the calculation anywhere else, you got to get the RIs from here. DD bands are calculated in futures. They're not calculated, and it's a futures thing. So it's not calculated and converted to equities, and it won't be. We decided against that because it would require additional learning curve, etc., to teach people that when you convert something to the other, it's not a static number. It will move around in real time. So like if I were to convert hedge pressures to futures because they're calculated in equities, then the hedge pressure would like move around like my mouse is moving around because the conversion is not always the same tick for tick. In real time, the distance between the two, the ratio between the two changes. So, as cool as it'd be to put everything on one chart, it doesn't make sense to put everything on one chart. We keep them separate, Keep your future stuff on a futures chart. Keep your equity stuff on an equity chart. They're two different things. So SPY doesn't have a DD band. It doesn't even care about DD band. It doesn't even interact with it. There's no reason to convert that. This is all we kind of got together. We thought about making the conversion and teaching you how it dances around and going, and then we looked at it. And then we read the announcements, you find out people can't even read simple directions on, hey, by the way, here's a lateral free upgrade. Then releasing something that requires training would just be a disaster. I'm not making fun of that guy from yesterday. No, but seriously though, that additional training would just be harder to understand. It's better just to keep them side by side. And all training materials, we're going to start filming that today. We'll also reference that. Down the road, we might create what we call a converted chart where everything converts to one chart, but it would be like a Pro Plus feature. It would be training on that feature and it won't load by default. You can go in and toggle it and turn it on once you learn how it works, etc., and be trained on it. Yeah. But yeah, so unfortunately, those of you in extended trial, you will hear about risk interval and DD bands. It's no longer available to you. We've pulled it from the extended trial. So the extended trial used to get those numbers in a bot, and it's part of the irrational series. But what's now going to be happening is that the boot camp is not going to, it's going to reference DD band as an optional thing that you can add when you upgrade. You can learn about it in the extended trial, but you won't have access to the numbers in the extended trial. And then we're going to make sure the new training materials state that. And, okay, cool. Let's get that hedge pressure tap. That's what I'm waiting for today. Bye-bye. like what I see this morning, things are looking pretty solid. Looks like the bull market's coming back. I think the selling has stopped for now, which is great. Hope we get like a nice little run for the next couple weeks. That to me would be optimal. I would love to see the market move higher. All right, let's take a look at yeah. Let's see here. Look at some stocks. It's gonna be a short stream. I have to go to the dentist today. I had a crown put in on Friday, and it came off. There was a temp crown while the real one's being made, and it came off while I was working out. So my mouth is like physically raw. Yeah, I'm still kind of waiting for that pullback to hedge pressure to take along as well. Let's see what's going on in the stocks world. Nvidia is looking great today. Like, I think everything, the majority of stuff. I mean, DD ratio being so high. I mean, things are awesome. Can't say like basically the market's back to normal. We're still above monthly hedge pressure. That's great. We're still in bull zone. That's great. This market can be more bullish again. So, you know, that bear market, you know, the bears might have had a month of told you so, but ultimately they are being proven wrong. This bear market is dead. It's good to see that, at least for now. Doesn't mean that it's gonna not come back, but at least for now, we're still planted for the rest of the month above monthly hedge pressure. Still a solid as hell DD band. I mean, sorry, DD ratio. I mean, things are great. So I'm looking for dips to buy on the way up. Doesn't mean that I'm gonna long, like it's gonna rally straight up. It's just no longer volatile. So I'm not gonna expect the market to sell and get wilder without an event or a catalyst push things higher. Solid there. Makes me happy. Take a look at the events for the week. Consumer confidence and JOLTS. These are going to be big numbers on Tuesday. So JOLTS is going to be a big part of economic growth. We'll see if there are actually jobs that are open that are getting filled. So the JOLTS will tell you. You want to see JOLTS in decline to signify. You want to see JOLTS in decline with continual unemployment. These are the way you read this. JOLTS is a good and bad thing when it declines. There's two different ways to read it. So you have to pair it with something to get the real read. Everybody slap your face for a minute and wake up. I'm going to teach you something pretty cool. Initial jobless claims. Continuing jobless claims. Okay. So here's how you understand. What JOLTS are, again, this is going to be big for this this print. JOLTS are available jobs recorded by the U.S. BLS, Bureau of Labor Statistics, to measure vacancies. Now, JOLT is job openings. Just remember JOLTS. A JOLT is job is open if these conditions exist. There's a position that exists and there's work available for that position. So there's a supply and a demand. Okay, so there's people actively able to interview for that position. The job could start within 30 days, which means you're ready to fill it. Like it's a job that's in moderate to high demand. It's not like some job that's sitting there that can't start yet because of whatever reason. Like we're opening a factory in 6 months. This job is open. Please interview and hire for it. Well, that factory job doesn't count for a JOLT unless you can fill the position in 30 days. Okay. So there's active recruiting. So it means there's no interrupt for the reason why a worker can't find the job. So essentially, there's available job with an available worker that can start within a month, and there's active recruiting such that the job isn't being filled because people aren't recruiting for it. So the idea is that if JOLTS are coming down, it means jobs that are open are no longer open. So two things can happen. Either A company can eliminate the job to begin with, so jobs no longer open. You're hiring a bunch of people and you're expecting slowdown. You're going to close those jobs out. Then what was previously a JOLT, previously an open job, is no longer an open job. The job is removed. It fails on the category of the job exists. So when JOLTS come down, companies can be closing their doors on hiring spree, which is bad. It can be bearish. So think about it like this. You want to hire 5 new people, and all of a sudden, you have some downturn and market's slow. You can't find the people, and now you decided you don't want to hire those 5 people anymore. You only need to hire 3. You close 2 of them because of expected slowdown. Then that's actually the bad reason JOLTS go down. But another thing is that whenever you create a bunch of jobs and then it takes time to fill them, and you start filling those jobs, then the JOLTS come down because you're actually hiring people as well. So either closing the job or hiring people. Both of those things push the JOLTS down. When JOLTS go up, it means that you're creating jobs that aren't getting filled. And so essentially when JOLTS had their waves like this is like post-COVID, a bunch of jobs opened up, and then jobs were opening up faster and people were getting filled, right? That's what inflation, that's where the inflation came from. They had so many jobs available and so few workers to fill them, they can ask for whatever they want. Companies are desperate to hire. So now when JOLTS are pulling back, you have to say, well, are companies closing their positions because they're not expecting growth, or are they actually filling the positions they had open, right? So if you could go to the unemployment data, you can get the answer for that. So initial jobless claims are people that typically get fired that week and go file for unemployment insurance. So these are like waves of layoffs. Like these weeks, there's more and more people laid off and fewer people laid off. So we're having waves of layoffs, right? We're still having waves of layoffs. Not really terrible looking, but I mean, it is there. It's no COVID, and the numbers are still moderate, 200 something thousand, just like they were pre-COVID, 200,000 give or take. So we're not entering like crazy firing sprees like we used to. This is just the typical noise of seasonality and other things. So this is pretty average. We're not seeing 200, 300, 400, 500,000. In a healthy bull market, 200,000 is pretty normal. Okay, so continued jobless claims is how you decipher the JOLTS. These are people that still qualify for unemployment insurance even beyond the first week. This is the total number of people that are filing for unemployment. Now, while you have waves of unemployment over the waves of layoffs, of those people, how many of those people are still unemployed and unable to get their job back? Let's talk about that relationship here. Example, somebody that got fired here probably got their job back inside of here, while other people are getting fired, they're probably getting their job back. So this is the graph that shows how many people are going back to work. So as you had those 1, 2, 3 waves of layoffs, you see there are 3 little bumps here. And overall, the continual jobless claims are going up as more people up until the beginning of this year were getting fired faster than they were getting hired. Pairing that with the JOLTS, you can see the same thing up until January of this year. Give or take. You had more jobs opening. And some people getting jobs back, but you have more people becoming unemployed. Now, as those jobs are starting to get filled, you'd expect the continual unemployment claims to come down. And that's exactly what that shows. This shows that we're on a hiring spree. That the JOLTS coming down means that the continual unemployment claims, the people that have been through those 4 waves of layoffs, are now starting to finally trickle back into the workforce for whatever reason. So while people are still getting laid off, seasonally, whatever, job openings are going down as continuing jobless claims are going down. So when jobless claims are going down and job openings are going down, people are going back to work. And they don't do that in a recession, at least not now. This is fundamentals 101. Now, we teach you how to read fundamentals the right way as a trader. This is logic straight up. You guys got it? Super simple. So now, essentially, folks are going back to work, which is great. Companies are still filling vacant positions. And a lot of that had to do with the fact that supply and demand brought wages down. More people unemployed. Where's that at? Over time, you just had more and more and more people unemployed. Then the competition gets high for the job, and therefore wages start to plunge. We had inflation due to wage inflation from COVID, and now people are getting laid off because they're getting replaced by people that want to work less or whatever the case may be. And then as the job pool gets bigger and bigger and bigger, you have more workers than jobs. They're now competing for the job, and therefore companies can pay a lower salary, and supply and demand is bringing those wages down. So now people are going back to work with lower wages. Easy as that. That continual jobless claim pool of people are finally going back to work, probably because of desperation. They got that big boost of a salary, bought that big expensive house, and they can't afford it without that salary, and they're holding out for a job they'll still pay that much. But now more workers are standing beside them ready to take the job at lower rates, so therefore wages are coming down. And now people in desperation are probably like, hey, whatever, I'll take the job at 40% pay cut, but I need a job. And then that's where we are right now. So you don't go through, markets don't Or at least companies, when you look at the macro, don't hire people trending hiring. Since April of last year, they don't hire if this is just a speculative hype bubble in tech, unless this is the biggest stupidity of people see. There are companies on hiring sprees right now. You want to be hiring people with the intent to fire them within 3 months or 6 months. Any problems coming with the recession are going to be years down the road. It's a year long. It's going to be a slower. We might have a problem, a recession, a bigger one, a slower one. It's not going to be a 2008 long-term debt cycle collapse. It's going to be a short-term debt cycle. It's going to be a small credit event. If there's anything, lending will likely dry up a little bit, which is more akin to short-term debt cycles, which we have every 7 to 10 years, which is pretty normal. Quantitative tightening will remove liquidity from the markets. The markets will be a little thin. That's normal. And the bears are ready to see the market collapse. It's impossible for this market to collapse. Literally impossible. There's no mechanism for it to sell off. Not right now. There's nothing. Even if credit dries out, we can start trending lower, but the market is not likely to crash whatsoever. There's no mechanism right now to crash this market. Nobody's betting on volatility. It's either everyone on planet Earth is stupid and doesn't see anything coming, or that people just see what's coming as mild and they're willing to hold through it over the 2 years we experience it. And I think that's the answer. Volatility would be VIX futures would be trading 17 or lower. Wouldn't be trading 20 and lower if recession was imminent. We'd be trading in the 20s and 30s. Forward curve would start to clearly show contango in the 25, 35 range if bad events were on the way. You can check the forward curve on the VIX and you can see future months are not that brutal. September's trading 16.5, October 17.5, November is 18, December is 18. Through December, the VIX forward curve is flat, and that's again signifying patience and tolerance of holding through the market, and nobody's betting on volatility for the remainder of the year. So the seasonality expectation the market's going to sell off this September is dead. I'm calling it now. I think it's a dead move. I think the market's going to rally for the remainder of at least the quarter. The rally through October is back. If you look in bottom left of my chart in October monthly maps, you can easily see that. I think it starts today. As long as everything stays constant. Now, again, as a trader, you got to listen to changes. But the slow economic growth we're experiencing, and also GDP growth, quarter over quarter is still positive. You don't, clearly we're in a small expansion range, like it's a couple tenths of a percent, but it's, wait, hold on. I can't remember what it was. Changes. It's not going up a lot, not going down a lot. It's just steady positive. And so you also don't experience that unless you have that, if you have an equality of supply and demand. Enough people working for the wages you pay them, and companies are creating products people are buying. GDP is going up because we're adequately boosting the economy. Prices are low enough that people are able to buy the stuff, so they can keep making more stuff. So GDP keep going up. They can keep hiring people to make more stuff because they buy more stuff. So inflation is not that bad of a problem. If GDP is going up, then telling you inflation's not hitting as hard as people think that it is. Now, what it is hitting is what is hitting hard is cars, houses, big heavy hitting items, max with high interest rates. But still, I was reading some data this last week that shows that, what is it? The average rental price relative, I think it was it's now for an equivalent house is 50% more mortgage to own than it is to rent these days. The rental market's completely got superseded by those high interest rates on those big giant home loans. So I think that even though there are still people willing to buy these houses at the rates that they are at, and they'll probably refinance later at a lower rate when rates come down, it tells me that people are believing that interest rates being so high is a temporary thing. They're willing to rough it out for a couple years until rates start coming back. And if the Fed's committed to cutting rates next year, that doesn't directly affect the mortgage rates, but in general, interest rates will start to shift lower in general if the Fed is cutting rates as well. So I think we're nice. I think the market's back to trying to reclaim highs this month. So I'm excited to see that. A crash is defined by myself as in trading, a crash. When I said crash earlier, I'm referencing to the bear's definition of crash. For me, I define a crash as a 3-day sell event or longer that each day is a red candle that closes lower than the previous day. I define that as a crash. The market is able to sell off for 3 days. Why? Because in a traditional bull market, you usually have 3 candles green for every 2 candles red. So 3 red days in a row is usually rare and usually an event. So little crashes happen. I call them crashes that way. So a bear's definition of a crash is usually pretty stupid, that the market's just going to plunge to zero with no mechanism. It's just going to fall and find lower lows. They find some support on a chart and say we're crashing to 3,200. So crash is a very open-ended word that people define differently. I use it in a trading sense, like a flash crash sort of thing. That's why I define crash that way. Crashes are temporary. Like in 2008, the market didn't crash until the very last, until like that September. It was bearish for a year, and then it finally crashed. And let me show you how I define the crash part of a bear market. And this, again, I made this up, so this is how I do it. So this is no textbook definition I'm giving you. Like, markets trend lower, but they're not always collapsing on themselves. An example is if you go to COVID, listen to the SPX right here. If you go to the post-COVID recession, actually go here. If I count the candles from here to here on this run up, there's more green candles than red. Usually it's about a 3-to-2 ratio or greater than 50-50, somewhere between 50 and 60% green candles. Okay. If you count this downturn inside of here, it's actually, there's more green candles than red candles still. It's a very cool phenomenon you'll notice. Even in bear markets, in the bearish markets, there are just as many green candles as red candles. Like the candle count trick blows everyone's mind when I do it. Pick any period of selling off. You will see that there are just as many up days as there are down days while the market's pricing lower. There's always willing buyers. No matter whatever mechanism price is selling off, there's always willing buyers. Now, a crash should be an event. Like, that's a small crash, right? 2018, this is like in the period where we were having like trade war with China during Trump's presidency. Like this, like 1, 2, this is a little crash. This is a crash, right? This little ending part is a crash. These little things are where markets just collapse, and it's accelerated volatility. Things just move fast, and you're just going to be like not having fun with it. Okay. So in 2008, what I consider, this isn't market crashing. This is also, go count the candles here. You will count during the big recession. This is a long-term debt cycle collapse. This is a Great Depression level loss of capital value across the globe. So this is like 1929's loss of value. Same thing. But you count the candles to the first, everybody knew bad news was coming from 2007 October till August 2008 for almost an entire year. You can count these candles. There's just as many greens as red. Market very rarely crashed throughout here. There's a crash right there. They reset for a little bit. And while markets are selling off, I don't consider it crashing because look, there's still willing buyers. A collapse is when there's no willing buyers, and you shift that ratio from 50-50 to like a very short period where you have 3, 4, 5 days, right? 3 days or longer of red candles. And normally you'd have 3 green candles for every 2 red. So instead of having 3 red candles or more, I'm calling that crash. So when you add like the Baron Lehman stuff, this is when the market really collapsed. Okay, right out here. This was the market crash right here. So whenever you want to analyze and think about markets, the entirety of a bear market is not a crash. A crash is a complete void of liquidity where markets just completely collapse with no buyers. Do you understand that, Ralph? 1, 2, 3, 4, 5, 6, 7 days of crashing. And then the crash is over. That's my perspective, is that when the ratio shifts from stable liquidity to zero liquidity, right? For practically none. So like in a recession or a sell-off market, you're not triggering limit down every like crash has the capability of having limit down. Does everyone here know what limit down is? Type yes if you do. No if you don't. Like when you're crashing, limit down is very possible. You don't trade during crashes, but markets are selling off for years, but not hitting shutdowns, right? The market's not shutting down. So limit down and limit up is a thing in futures that state if the futures market moves a certain amount, trading stops, period. It's called circuit breaker. Limit up, limit down is a thing. Let me example. The S&P futures. Now, some things, every futures contract is slightly different. And rules are slightly different. Let me give you an example for the S&P. During U.S. market hours, so that when our equities market opens, the futures market, if it drops 7%, trading ceases for a period. I think it's 10 minutes. And then basically you can't sell any further. You can buy, but you can't sell, which you'll notice. And also I can draw it real quick. Where's my drawing tool? You open up my pen really quick. So in market crashes, you have to be very careful because circuit breakers are there. And if you trade through a circuit breaker, you're going to fuck your life up. Your trading account could go negative. And so imagine an account that you have going negative and you owing your broker money. Imagine what your life would be like if that was the case you had. Okay. So normally I'm going to draw a scenario. Say that's the 7% circuit breaker, right? It's a percent basis off of the settlement price of the previous day, which makes it even harder. So let's say that like the market closes right here at 5 p.m. futures, right? 5 p.m. Eastern, and that's ES futures, okay? It's not 5% or 7% or whatever the percentages are from close. It's percent of settlement. And settlement is not the close price. Settlement's a calculation done after the market closes, and it's printed on the CME website. So you have to take the settlement price, which you have to go fish for somewhere, which is, again, it's within the range, but it's not exactly here. You want that exact number. Settlement price minus, you have 7%, 13%, and then 20%. Now, in the overnight session, and the S&P will shut down if it trades lower by those percent. In the overnight session, it's plus or minus 5%. So the market in the overnight, if it goes 5% above settlement or 5% below settlement, circuit breaker is triggered. Until the ask or bid is bought up and trading resumes. Now, what does that mean? Imagine this. Imagine the market has crashed and hit a circuit breaker. Okay. Now, the S&P trading will cease, but here's what happens. Like overnight, this happened one time after like the Trump election, we hit these things. Markets collapse and you can no longer sell. So everybody's loading up orders on the limit on the level 2. You might see like 10, 15, 20, and you might see like 42,612 right at the bid. I mean, at the ask. And this number will be moving up and down as these change or people are buying up. Like if I go in there and I buy, when the circuit breaker is triggered, I can go buy 1,000 contracts if I want. Now I'm in the contracts, but I can't dump them. I can't sell them unless somebody buys them from me. And that will change to like 41,612. So you'll see this is like a pool of orders that people are just etching away and grabbing them if they want. And then as soon as this thing gets to 0, trading will resume. So what's neat is that you'll see like time go by. You'll see like a little pop and then it comes back, and a little pop and it comes back, and a little pop and it comes back. Because people are like actually gobbling this up, and then prices go up a little bit, then people slam it back down, circuit breaker re-triggers, and people got, so essentially you can buy, but you can't sell below that. So you'll see that eventually markets will turn back on. Now, the problem with that is overnight, it'll stay like that at that 5%, and that's it. When the US market opens, however, it's no longer 5%. So don't be like, let me gobble up 5%, I'm going to make my money back. You're fucked when the equities open if this happens. See, what happens when you hit 7%, you shut down for like 10 minutes, and then the IOP comes on, the market calculates and opens up at a new level. So whenever the circuit breaker lifts, the market will randomly jump to some random spot, usually down. And so while you might have gobbled up some contracts if you wanted to here, the market can open up and gap down just like a new day. And when it gaps down, there is no trading here. The CME group runs the IOP calculation, which calculates the gapping price. It does it every day, actually, when futures market opens. So imagine you're trading and you hit that 7%. You decide to buy some contracts, and you're like, whatever, it's going to rally. And then the gap happens and hits the 13% immediately. Without any trading, it shuts down a second time. This happened one time in my trading career, and it happened during COVID. You trade down, hit that 7%, then say your stop is right here where you blow up. Say that that's exactly where you blow up your account at 0. And you bought some contracts and all of a sudden they run the IOP and market gaps right here. You'll see nothing on the chart. You'll see no trades, nothing. Nothing in the time and sales, nothing on the chart. You will just see the market trading to a level. Then you'll see hash mark for that moment. And then when the market opens again, it can drop down to 20%. At 20%, it closes down for the day. It can jump from here to here 6% without even a single trade. And that happened during COVID. Imagine what happens if the market just jumps right there. There were no candles on the chart, but imagine your trading account that said $20,000. The market blinks and shuts off with no trading. All of a sudden it says negative $187,000. And you're freaking the fuck out. Thinking, oh my God, what happened? I had a stop loss there. Well, stop loss fires a market order. There were no trades. Your market order got rejected. So what happens when you're negative $187,000 and the market finally opens back up and starts trading in there? Think your broker's gonna let you hold that position? You immediately get liquidated and now you owe them that much money to bring it to 0. Imagine what you'd go through being in that kind of event. Imagine what psychological torture. This is debt you owe. They liquidate you, you owe this. They'll probably charge you off as bad debt. You got credit agencies hunting you down for the rest of your life. So if a circuit breaker is even possible, you're a fucking moron if you're even trading whatsoever futures. You're a goddamn idiot if you are trading futures when crashes are happening. We teach you all of these things to avoid crashes. I've known people, now again, this is one time in my career, but I know people that got in that event where their account goes negative. And your broker has no sympathy for you. You owe that. It's like you borrowed that much money, you didn't pay it off. They immediately start going for collection. You get margin calls, you got caught with the money. And if you don't, they will ruin your life for the rest of your life. So don't ever trade futures or anything with leverage. Anything with margin has that capability when circuit breakers are possible, period. The market's moving 4 or 5% a day. Don't trade those days, right? We'll know clearly, but DD bands are one of those safety mechanisms. The DD band safety mechanism is never 4%. It's always about 1-ish%, give or take. DD band is roughly 31 points on the S&P trading at 4,000. Okay. It's 0.7%. So if you follow the rule of don't trade outside of DD bands, you'll never be in that boat, which is great. And then if in a crash scenario, you'll see overnight, I mean, we're trading like well below DD bands. You wake up and do not touch that market. Stop loss market orders are never server side, Ralph. Listen, stop loss, nobody sees a stop. This is where I love teaching people this. A stop loss is never server side. The stock market does not see your stop loss. The level 2 does not see your stop loss. A stop loss is client side on the platform or broker side. If you put in a stop loss, it is not even a real order. A stop loss is as a promise to submit a market order. That's it. And a stop loss is a contract you make to allow your broker to fire off an order on your behalf at the market price the moment that condition is triggered. So if you put a stop loss on the level 2, some people are like, oh man, those market makers are hunting up my stops. Those people are also idiots. Market makers can't see your stop loss. Only you and your broker know that it's there. A stop loss market order is a contract that you agree with your broker that says you're allowed to sell or buy to cover at this price on my behalf. Your broker says, great. As long as if the condition triggers that you fall below that level and you have a stop loss order, your broker at any time, doesn't even have to be immediate. Your broker within a fair amount of time fires a market order. And if it gets filled, great. If it doesn't get filled, they don't circle back and tell you, hey, by the way, move your stop. If it doesn't get filled, your stop loss disappears and your order gets rejected and you're still in the position. The broker just says, okay, condition triggered. All right, sell at market. And it doesn't even have to be exact. That they just sell. Now, typically it could be exact, but they're at the mercy of just doing whatever they want whenever they want. Now, normally they'll dump your order right when it triggers, but if they dump a market order to the market and the market is closed, the Globex will send back an order rejected status to your broker, which will show up on your platform. Your stop loss will have triggered. You'd probably get an alert in Thinkorswim that says order rejected, and then you'll look and be like, huh, my stop is gone and the order was rejected. What happened? And that's exactly what happens. Are there future circuit breakers to the upside? Yes. The S&P overnight, before equities market opens, is 5% up and 5% down overnight. Now, during US market hours, it's only down. The market can rally 20, 50, 60, 100%, and as long as they're willing buyers, they're glad to sell it. But the overnight is to prevent illiquid overnight from creating unusual behavior in the market. So certain things have up and down overnight, certain things don't, certain things are only down. Each contract has its own specification. Now, when the 5% circuit breaker is triggered, it clears as soon as the other side of the bid or ask is cleared out. So if you rally 5% and everybody wants to buy, then it stops trading until that bid is cleared out and people sell below it. And so once it hits, it can't go any higher than 5% overnight. So trading pauses, but it doesn't stop all the way. It just only allows one side orders when the up or down is triggered. In the daytime, however, once you hit 20%, market shuts down trading altogether. When you hit 7%, the market also stops trading for a short period of time and then gaps the market again to allow trading to resume. In the 5% limit up or down, you can still trade, but only to the side that wasn't limit broke. So if you limit up, you can only sell. If you limit down, you can only buy. If you limit down in US market hours, you can't do anything for 10 minutes. You're stuck. I think it's 10 minutes, 10 or 15 minutes, maybe 10. There's so many numbers in my head, I always forget. That's how it works. Yeah, your stop loss does not go to the exchanges. Oh my God, it's not an actual order. The exchanges only see the level 2, which is limit orders. That's it. The only thing that is submitted to the books is a limit order. A limit order is an order that is supplied to the exchange to be filled at the price you want to be filled at. When you execute a limit order, it sits on the books. The level 2 will see it. If you put a limit order right now, Ralph, I will see it. The CME website lists all these rules. Yeah, go to the limit up, limit down on the contract specifications for any contract. It'll tell you. If you always tell me I should teach like a getting to know futures class. Anytime you open below, let's see if we can find it. Anytime you open, like the equities market opens outside of DD bands, you always going to be concerned that there are, you always going to be concerned that there's possible limit up, limit down. Okay. See FAQ for S&P 500. Let's see if this gives us, I'm going to find out where the data is. Here we go. So they all have different, each exchange has different rules. Like if you go back here, an example, this is, okay, so these are equities, for instance. Metals will be different, oil will be different. They all have different rules for this. Energy price limits, metal price limits, interest rate price limits, equity limits. So you trading stocks are going to care about the equities limits, right? So here it is. US market hours up until 2:25 p.m. Central. These are the successive limit down halts. This is the hard downside limit from this little period of time after equities market closes, but futures market's still open, yada, yada. The upside limit has been changed. Wait a minute. Hold on. Oh, no, never mind. That's right. It's still 7% in that period. So yeah, the overnight limit it used to be 5%. It is now 7%. Oh my God. I didn't know that. So apparently since the last time circuit breakers are triggered, which was 5% overnight. It looks like the overnight is now plus or minus 7%. I didn't know that. Well, I learned something today. When did they change that? So that whole speech I just gave on plus or minus 5%, that's wrong. It's now 7 for equities products. And maybe they changed that during COVID. I can't remember. Well, now that I know. And then here's the protocol, what happens. So when the 7% limit down is triggered, during a monitoring period of 2 minutes, trading will continue only above the 7% down limit. So essentially trading doesn't shut off, only one-sided trading. Again, I thought maybe I must have slightly changed these rules. These are different than I remember them. I thought trading stopped all the way, but apparently if you limit down 7%, you could still buy in the first 2 minutes. If the limit condition still exists after 2 minutes, a 2-minute halt occurs. An options price limit expanding. Okay. So essentially, if it recovers within 2 minutes, then markets are good. If it doesn't recover within 2 minutes, then markets collapse. They slightly modified this. Interesting. So essentially, if you guys follow, if you hit 7% within 2 minutes, you can still buy. But if after 2 minutes, there's still a limit condition that exists, then trading halts. Same thing at the 13. Okay, so you're down for 2 minutes now. And then they gap. Oh. I swear it used to be like 10 minutes. So you hit 2 minutes and then the market will open with an expanded price band, which basically means CME will run the gap calculation and futures will gap. And if it's enough, if the calculation comes out below 13%, like I've seen one time in my career, you hit 7% halt and then it jumped to 13%, immediately halted again with no trading in between. And then when you hit 20%, usually trading is done for the day. Okay, that's it. No, here it is. It is 10 minutes. Okay. And what is this? What does this mean then? I say it does shut down for 10 minutes. I was right. Trading of products tied to the S&P. Ah, okay. So if the S&P triggers, then stocks stop trading for 10 minutes. That's the 10 minutes now. Now I remember. See, I need to brush up on all this. A hot minute ago, I was studying for the Series 3 and I learned all this. So any associated products, if the NASDAQ hits a limit down, all your NASDAQ stocks will stop trading for 10 minutes. Okay. All right, let's take a look at the prices today. So anyways, you have to just be careful on crashes because you don't want to deal with those limit. Imagine the S&P, you know, throughout the day moves up and down 30 points. Typically 30 points-ish. You know, typically a move like that is relatively, you know, 1 to 2% or less of the market. So to trade 5 and 7% in a single day, you don't want to be trading days like that. You want to avoid those kind of market days. With all the greens and reds in here, you don't ever want to trade when the markets move that much. And the safety net we built for you is the DD band. You will know because the DD band, like I said, is less than, it's basically less than 1% almost all the time. That's those ratio limits. So the DD band you'll never trigger a circuit breaker inside the DD band. Believe it or not, that's a cool little side rule. It's impossible to trigger a circuit breaker in DD bands. So if you only trade inside of DD bands, you'll never have that problem. If markets are trading outside of DD bands to the downside, I usually don't trade most days. If I do, I trade very, very small. I don't want to be in a scenario where I go negative in my account. Okay, let's talk about it. S&P at hedge pressure. All right. Perfect. All right. Also, like future-specific courses and future-specific training like this will be also part of the Pro Plus package. Like Pro Plus is going to have where the heavy focus on futures will be. And like Pro will be like more like equities and options focused. So keep in mind, if you guys like this style of learning and learning about futures, that's where Pro Plus will also be too. So we're going to change the courses up a little bit to where Pro Plus has the access to futures courses like this. Yeah, this is a good long entry. I have to go to the dentist though, get my crown fixed, so I'm not gonna be able to do some trades. I'm gonna leave this alone today, but this is a long entry spot. Let me call them real quick. My temp crown popped off. I can't like eat or drink anything. My tooth is on fire. You got like a whittled nub, like a meth head. You want to see NPWR? Okay. Let's see, we don't have data for that. Very good. Any thoughts on QQ bouncing on bottom bull zone? I think that's always a good setup. I had to go. Just let's see QQ right here. If you look at the liquidity map, you can see that bull zone's always a support. What do I think about it? I think it's great. Positive DD. I think it's good. We have hedge pressure break scenario, but with the lack of volatility, I'm feeling pretty confident today that there is a possible trade. But the thing is that it only goes to hedge pressure, right? This particular setup, you only trade the next resistance, or you trade to the middle of blue and bottom. This is one of the cooler ones. So the middle is like between here and here. It's just this little V, like it's happened 2 times already. There's not a lot of trade for that. So I wouldn't utilize it as a day trade potential. Ralph, good question. Yep. So SPY hedge pressure, positive resilience, and with VIX below triple B, we don't expect overshoots of pivots. So if it does trade below, it's no longer overshooting. So watching the S&P, we're in the condition of VIX below triple B, right? VIX is down here. So you're expecting razor sharp pivots. You see how it's very sharp. It's not oscillating or hovering around. Like, this is not razor sharp. So, but that's, the VIX is not QQQ. VIX is S&P. So if there is a long, it is from here. And if it starts hovering or holding hedge pressure, I cut quick. That's how that works. VIX is below triple B is the easiest type of trading you can do. The pivots are sharp. This is a sharp long entry potential right here. And you can see how they waste no time to pivot. Meaning that it doesn't mean that it has to pivot, but if you're wrong, it's easier to see when you're wrong when VIX is below triple B. An example is if VIX is above triple B, VIX is above it, then it's hard to tell if this is going to hug or hold hedge pressure or not unless you break one strike, and then it eventually can rally or it can sell off and lose. It's much harder when VIX is above triple B. If VIX is below triple B, it hits and goes, and if it starts hovering for even a hot second, I'll close out. I want it to bounce and go. Do we all understand that? Below triple B VIX, you want it to bounce and go. Literally this. If it does not hold and it goes back to hedge pressure a second time, I bail. If it starts hugging it and not getting any bounce. Nice, clean, sharp pivots at hedge pressure. Below triple B VIX. Same page, everyone. Yes, type yes if you get it. No if you're confused. This right here. The condition of VIX in decay below that contango midpoint is a condition of sharp pivots. That's what it states in the actual training. Pardon me. I don't know what happened here with the this was so weird because it was like, I do need to fix this. I'm making a note to do that today. It's all lined up and beautiful here, and then when I hit enter, look what it did. Look at that. I forgot that it looks weird. Okay. Some formatting thing or something. But anyways, here's triple B. If VIX is greater than triple B, loose pivots overshoots. If VIX is less than triple B, razor sharp pivots. Keep that in mind. So you'll identify a hedge pressure break much more quickly in this environment. It's actually in, if you look at it, we teach you how to do it in the Pro Plus classes, and also it will be available here as part of the handbook, which some of these are about to be switched to the Pro Plus role as well, so just keep that in mind. All right. You guys want to do your upgrade to Pro Plus, remember, it's going to be $89 a month. Locked in for life. Most of you that signed up locked in a price for life. The price is never gonna go up. After today, after midnight, the Pro Plus membership is $139 a month at the end of the trial. So if you're paying $35 a month now, you get a choice to make. If you want to just hang through the trial for 3 months, at the end of your 3 months, it's $139. If you want to just take a go at it and abandon the trial and jump right in, you can lock in $89 for now, but you cancel anytime though. So if you don't want to stay at the service, you can always cancel. But you gotta lock the price in now, or else you're gonna pay $40 extra a month forever. By the end of next year, Pro Plus will be $200 a month. It's going to go up again. So $139 is a huge, huge drop in price. Full version of the platform is going to be $200 a month. So those of you that locked it in are going to be lucky. Keep that membership active and you'll never have a price raise. That's what we tell people. Like, that's why some people were like, why are you raising my prices? You don't, if you lock it in, you never have a price raise. Never, ever, 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 ever. One exception to that was if you go get futures, you got to pay $1 a month to your broker for an exchange. That's not a price raise from us. All right. I use Edge Parp, and yeah, I know since the new implementation of futures, the browsers freeze for me as well. One of our new projects is to optimize that. Once we shoved everything together, once you guys all started using it, we realized that we're hitting bottlenecks, technology bottlenecks. So as we're scaling up and getting really big, we got to go clean everything up. So in the next couple months, just know that you're going to wake up on various Mondays with a new patch behind the scenes of things operating and acting more smoothly. Like this, for example, resilience is starting to fall closer to 0. Now, again, we're irrational, so I need to be greater than 10 to hold this. If I were trying to long here, I would close my long and not try it. We're too close to 0 for me to get positive resilience. Let me let this settle out today. And if we break above hedge pressure again, I'll jump back in on the long. That's how I would trade this. But I got to go in 5 minutes and head up to my dentist. Anymore. I don't know why. Why that formatting got all funky. We'll go through and we'll set that up. You know, I woke up one day and just saw that. I was like, oh. It's being kind of strange looking. Okay, let's just copy and paste all of these. Clean it up just a little bit. I'll clean up the Discord before I go. So we'd love for you guys to join our Pro Plus program. Obviously as well, you know, anything you do to support us and support development is really nice. You know, obviously it costs us a whole lot more in overhead and development to facilitate features and automation and things. And all this is going into what we're calling our rule assist mode, AI assist mode. These are the big features, and you're gonna have to have Pro Plus to get that. Rule assist mode is gonna be allowing you to program your own rules or utilize our rules, and it would actually keep you in check while you're trading. So if you're like breaking a rule, it'll remind you you're breaking your rule while you're breaking it, like on the fly. So it's gonna be pretty neat. How this works. Oh, is that why I did that? I see what happened. Formatting thing. Oh, this is why. Okay. Figured out why it's being all funky. Let's just delete that, and that, that, and that, and that, and that, and that, and that, and that's pretty. Okay, cool. I really appreciate you guys. You all are great clients. Are the best. This should clean up a little bit. All right. All right, did that fix it? Okay, beautiful. Okay. All right. Yeah, I clean up the handbook. More info, rules of thumb. Okay. Next, put that down here. Priority. Alright, good. Okay. Handbook's cleaned up. Funky. Yeah, a lot of times you start to see what happens is switching the different sockets from futures to stocks in the same platform is a challenge. And when we released it, as we're starting to add, you know, more things and things like the watch list made that very apparent. Like switching between the two, sometimes freezes or the socket connection will drop out. So it's kind of like something that we're gonna work on. See how mine's freezing as well. It's not crucial at this point other than just to have DD bands printed on the chart, but you can still have them by calculating from the risk interval itself. All right, y'all. You have any questions for me? I got to get out of here in just a little bit. Message me for that Pro Plus code. Again, if you want to check it out. Worth it. Yeah, and with good risk management, along from hedge pressure is pretty good. Like from here, I think is not a terrible idea. Again, not investment advice for you guys, but if I were here, I would put, if I were gonna be here, I would put in a long and just set it, forget it. Put a stop loss, one strike below. I love you guys. We'll see y'all later. I don't know how long my appointment's gonna be. Could be an hour or two. But if I get back early enough in the afternoon, we'll do a Zoom call. With resilience being negative, I wouldn't long. No. Good question. Sorry, my bad. Yeah, no, never mind. Resilience is negative now. I'm not even staring at my screen. I'm typing. With resilience negative, no, I wouldn't do anything from here. I would let it fall. Correct. So you have to be careful, right? Now, irrational signals mean that resilience could rescue itself and the index could lead to stocks. Anytime I make a trade, I just have to make sure I use risk management. So if I were too long, I would take a long here anyways, and I would hope that resilience goes back to being positive, as in it's delayed. So when you're fully rational, resilience will lead the market almost every day. When you're irrational, the market can lead resilience, and sometimes it's not a leading indicator. So if I were to long instead of stop loss, my confidence is there if resilience goes positive. And that's kind of like the way to go. See, like my platform is frozen. I switched to futures. That's one thing that we will be working on. Yes, sir, Livewire. That's exactly correct. See, when I click features, it does that. Let me make a note of that really quick. Let me just show this really quick. So the socket is disconnecting, and even though it's saying connected. So this is one of the troubleshooting steps that we don't understand. You can see that right here. No error. How to do a futures trade? I think there's a small one, but we'll deal with that. We're gonna refilm the videos and film futures videos starting today, maybe starting tomorrow, depending on how long it takes at the dentist. But yes, we're gonna have a whole series on futures, a whole training thing on futures. Yep. Promise. All right, we love you guys. We love you all so much. Thanks for supporting the Rocket Scooter Drive. Our goal to build the biggest, best trading platform on the planet. AI features that are coming out are going to blow your mind. So I'm excited to share them with you and create these things. So bear with us through our growing pains. As you know, we're developing things. And, you know, keep that feedback rolling. That's what we love to see. All right, off to the dentist. Love you guys. We'll see y'all later. I can't eat anything hot. Can't drink anything cold. I basically been eating like lukewarm water and tilting my head to the right to eat on the other side of my mouth. It's weird feeling a nub of a tooth where a crown should be, so we'll snap one of those bad boys back in place and I'll be back to normal. Might actually eat something like solid food. All right. We'll see y'all later. Make sure, remember, Pro Plus special ends today. Extended trial upgrade today. If you want to lock in the price or wait, forever hold your peace after today. Just send me a message. I'll give you the code to lock it in. We'll keep pushing for it. Love you guys, and we'll see y'all later.